All right, well, welcome to our live profile Q&A session for this Friday. Glad to have you with us. As always, we wanted to start with reminding you that any product that you trade, whether it's stocks, futures, Forex, has risk, and you want to be mindful of the risk. In fact, that's something that we spend a lot of time focusing on, is how do we define our risk? And defining risk means essentially how much objectively am I putting on the line to be able to express an opinion. And we use the profile as a way to do that consistently. A little background on me. I'm Josh. I'm the founder of Trade with Profile. Really, we exist to be what I couldn't have. It took me a long time to find the profile, which really was a game changer for me, but started in the retail space and then transitioned to now primarily being in the institutional side. JP may join us later on the call. He's another part of our team. Between the two of us, got almost about 30 years in markets, most of that on the institutional side, expressing risk, hedging, running managed funds, all of that. So today, the conversation has to do with having a bias. In fact, specifically, it's how do I know when I come into a session which direction am I leaning? And can I use a tool like the profile to help me express risk in a way that makes a lot of sense, or to express bias? Bias can be a way that you're kind of saying this is where I'm leaning, this is where I feel good in this direction, this is where I'm wrong. And this is a carry on to what we've been working through as a community. So our trading community, where we are working through what we call our development pathway, which is 16 modules. We do a different module every week to build mastery around auction theory, and how to use the profile as a way to organize the price information in a way that makes sense, in a way that allows you to define areas of probability and areas of risk. And really what the profile does is it allows you to see what other people can't see. It allows you what you could see if you were trading in the pits. It's in some sense it's a way to see behavior around price, which is really helpful as we're trying to find our way through markets. But this week we've been talking about constructing and monitoring a bias with the profile. Now, what do we mean by a bias, and what does that mean? Here's the challenge, and this is what we talk about a bias. So when coming into a trading session, this is the challenge. Like, which way should I lean? Should I be long? Should I be short? Is it okay to have a bias? If I pick one, how do I know when it's good, or how do I know when it's no longer valid? Anyone ever had these questions? I mean, I'm not pulling this out of the ether. This has been challenges for myself. I know for JP, for anyone who's trying to express risk in a market. There's this hunch, because we're making decisions on what hasn't yet happened. There's an aspect of trading, it's so hard. It's because we're making decisions on what hasn't yet happened, and so we're stepping up to the plate and saying, okay, based on what has happened and what's happening with price right now, here's what I think is going to happen next. The risk of not having a bias is that if you're unaware of subtle shifts in control of the auction, and you end up on your heels. How many of you ever felt like, oh man, I'm getting run over, and I don't know where or when to get out. Quick story: when I first started trading, I would call myself an order filler. I was not a trader. I was basically, connected myself to somebody else who was calling out trades, and I was just following those trades. But I couldn't tell you for the life of me why we were in the trade, where we were wrong, or even what the we were kind of like using these price action triggers. So I mean, it was just when these certain conditions showed up, we got in and didn't really know when we were wrong or when to get out. It was really frustrating. So having a bias really helps. And the great thing is that the profile as a tool gives you consistent reference points for establishing the intraday and multi-session bias of an auction. In a consistent, objective fashion, you can set the bias every day. And so if you have mastery around that, and that's what we've been working this week as a team, is that you have a session, a bias before a session begins, and then you know how and when that bias is confirmed or challenged. And just think like how that would help anxiety, stress, frustration, confusion when you're trading in the session. So anything that you can predetermine in terms of levels of interest, narratives of, hey, if the auction does this, then I'll do this. The auction does this, I'll do that. Anything that you can predefine coming into the session, you're far better off than just opening up a screen and starting to trade. Because the brain will start, everything we know about cognitive science says that the brain will start working against you if you don't have a plan. So I just want to walk through a couple ways that we establish bias and what do we mean by that. And then we'll open the floor to any other questions that you have about the profile or specific markets. So have those questions ready. Again, you can ask those in the chat or in the Q&A window, or if you have a mic, you can raise your hand. I can allow you to talk, and you can ask it that way. So however we can make this as fruitful and interactive for you as possible. But let's go over to the charts here real quick. And one of the ways we're going to look at the NASDAQ specifically, and actually I want to start over here. I want to look here. So on this chart, you can see that I actually have there's two bias levels. There's one that's called a pre-IB bias and a swing bias. For those of you who have not yet taken a trial or been part of our community, every morning we generate a plan. This is what our trade plan looks like. Everything on here has meaning and significance, but there's two things that we have as part of our plan, is what we call a pre-IB bias and a swing bias. Okay, so you can see in soybeans today, they actually were the same level. Sometimes they're divergent. So a swing bias is what I call a multi-session bias, and a pre-IB bias is what's my bias for that specific day. And why have two different ones? Well, I mean, I could have a market that is largely bullish, and yet I believe for the next session we're going to see lower prices, right? So I could have and that's what that pre-IB bias is. I'll unpack that a little bit further here in a second, but it's my bias coming into that session. So it's really focused for the session. The swing bias is more multi-session. So sometimes they're divergent. And in fact, the NASDAQ coming into this morning had a pre-IB bias that was negative and a swing bias that was bullish. We're now challenging that. So what I want to focus on, I'll just focus on right now, is not so much the swing bias as I will the pre-IB bias. I know a lot of guys are trying to figure out, how do I establish bias coming into a session? And one of the ways that I do that, just real simply, and encourage you to do the same, is to look at something we call IB extension. So if coming into a session, if this is the range of the first hour from yesterday's session. And you'll notice that we did not extend IB high, but we did extend IB low, and we had a lower close than the prior day. So based on that, I'm saying there's other time frame sellers who won the session, and I'm now looking for them to have control coming into the next session. So my pre-IB bias means before the initial balance is formed for today, or Friday, I'm looking for the sellers to control the auction unless we trade above value area high of the prior session. So that's why my pre-IB bias is up here. Now, once the initial balance is formed, which you can see here, here's the IB high, IB low, and you can see we have IB low extension. I don't want to use this as my risk anymore. So this is my risk or my bias level until that first hour is formed. Once that hour is formed, then I'm looking a little bit differently. Then once the IB is formed, so now we have IB low extension. So now I'm saying sellers are in control unless we trade above 71.17. So this is the pre-IB is my level coming into the session, and then it's either confirmed or negated based on what happens during the session. So for example, tomorrow, like coming into next week, right now value area high is right here, 70.87. So if, say we close, close below this level for Friday, then coming into Monday, that'll be my pre-IB bias for the NASDAQ. And I would look for the sellers to control up to that level, which would actually cut through a lot of, inventory. You can see the build out of volume here. That if we get above that, then, I'm looking for potential reversal of bias to the upside. That would happen if we challenge that level in the first hour. After the first hour, if we extend the IB high, that would change that. And I'll give you another example of where that plays. Is let's look at crude here, for example. Okay, so the pre-IB bias this morning in crude oil was 61.38. Obviously, you can see that there was a gap lower in crude that got into some long-term levels. And then the initial balance starts. Let me change this a little bit so you can see a little bit more. So you can see where that IB is. So you can see we took out the IB high. So we were with the sellers until we came back and took out 60.05, and then that negates the seller's control, because now I've got buyers that are stepping in above that first opening hour range. And unless we were to come back and return below the low of the day, 59.21, I'm saying the buyers have the upper hand right now. So it's a level that I come into in the morning, and then I'm looking for that to be confirmed based on what happens in that first hour. And then, that may either switch the plan, or confirm it, but it's a consistent approach every single day. So I don't know how you all establish, your bias coming into a session, but as a really simplistic way, and there are certainly more nuances to that. We talked about with our team this week around, where's value area placement, and what's the overall posture of the auction. Posture is kind of an internal language that we use to describe, at least in the last month, where is the auction, and is it overall bullish or bearish? But that is a really simple way that you can kind of confirm, or negate a bias coming into the session. Fair enough? So just got kind of a quick overview of where we've been this week. And if you want to talk more about bias, we can certainly do that. And then also answer any other questions that you have around the profile. Happy to do that. We'll say just real quick here, some kind of the plan for the day in the NASDAQ early on, because we opened with a gap, right? So there's a gap between here and here. We're looking for potential early, rally up into 71.70 to get short. Never got that, right? So then the other place we were looking to play, the range that we were looking to play was kind of between here and here. So now that we have extended IB low, we're looking for the NASDAQ to press into one, completely close this gap, and also get these singles covered up, and then maybe even press down to 69.86 by the close. Looks like, let me double check, but I think we're one time framing lower. So potential trend day lower today. So I wouldn't even think about going long this unless we printed a higher high on a 30-minute. Given that it's Friday, unless that happens in the next hour or so, I'll leave the NASDAQ alone and come back next week. For those who are part of our team, we were trading. We did a live session this morning. We were trading crude oil, and we got kind of show you where we were getting long on crude.
Sort of go through our bias on crude this morning as well.
Yeah. I mean, the bias was to the short side. We hit the gap. That's a bearish bias perspective, and then what started to challenge that was first the fact that we opened initially tested higher to clean up these singles in the Globex, and then came back through the open. Okay, that's not bullish. And then we traded lower with some pretty good selling pressure, and then right here you could see the spike in buying order flow volume that came right back to the open, and then we held that area. And then so when we took out this high right here around 85, we got long in anticipation of taking out the IB high. We had risk down here to 65, and we were looking for the move back here to 60.55, which we got within 3 ticks of it. Ultimately, we got stopped at 29. We trailed it up here and had the stops that you can see where they got stopped when we got the pullback. So we pulled 44 cents out of that. But it was one we waited for, and until we saw the bias shift or see conditions that there was an anticipation that the bias would shift. We're staying to the shorts. And even though there's, from a larger context standpoint, there's much to the to support to say, hey, we're looking for, a potential rally. In fact, value for the last 5 days is way up here, at 63.48. Actually, that's not right, 62.81-ish. So we're significantly far away from value. You can just see how the composite profile is just thinning out, as we get lower. So, the conditions are set for a potential rip, and we got a rip higher today. I think if another something just triggered, or it's just silly. If we could push back above IB high, there may be a potential from a swing perspective to be long crude for like the 61.20s, the 61.90s with risk at the low of today, but I don't know if that's going to happen. We really want to maintain the buying excess. So here's the open, here's the push below, and you can see now we've that looks like indecision to me, but we were using that bias throughout the session, and really, we're still saying that the buyers are in control unless we trade below now 59.21. Although they've really come back to the order flow. So order flow, the delta right now is like negative 7,000. When they started rallying, it was negative 8,000, and they cut that in half.
Buyers stepped in heavily.
Buyers stepped in heavily.
One thing to understand about the biases is that, it seems like we changed our bias and we're trading against it. Well, biases will depend also on time frames too. So if you're a shorter time frame player, then what's going to happen is your bias is probably going to switch maybe a couple times, just depending on where the trade happens for that. For that day. Longer term, the bias is still to the downside on crude. We're just well aware that we have stretched an amazing, $18 from the top. I mean, in, 4 weeks, 5 weeks. So that's quite the large move. So therefore, we got to be conscious that even though the bias is still to the downside, this market may need some rest, or we may see some profit taking. So a snapback could happen. And so on a shorter time frame, our bias may be long, while the longer time frame may be short, if that makes sense. So
totally, absolutely. All right. Well, I'm gonna open up to anybody else has any other questions or wants to look at anything else. One other thing that we're looking for, that actually was wrong this morning. Soybeans. Yesterday had WASDA report. And I just want to show you this. Just keep this in your file, especially when you have a binary event, as we call them, where you open from an area of balance. You can see the profile was built out here. Push below and then come back to that by the close. That basically the auction is rejecting those lower prices and gives it greater confidence to move higher. So we were long early beans. I was actually long beans at the close yesterday. I would defend out at 868, looking for ultimately this 895, and this trade is doing well. And they have IB high extension, so that's confirming bias to the upside. So we could now protect 876-ish from a swing perspective as this trade keeps moving higher. Software we're using. So a couple platforms you'll see me using. On the right here is WindowTrader Blue. So this is where, when I'm going to make decisions, I really, I like to focus on, like one chart where I can see multiple time frames all at once. And what this allows me to do is I can see a daily bar, I can see the composite profile, I can see 30-minute periods, and then when I really start to trigger, I'll open up, and this allows me to see 30-minute histogram with 5-minute periods colored by histogram of where the order flow is. And that can just be a really great, quick visual reference to let you know, okay, like when we saw this spike here, it was just the buy side along with the volume that was coming in. So there were, as long as those buyers held, which they did, that was kind of an early clue. But that's Window Trader, and then over here on the left is IRT from Linsoft, which is another platform that does. I use IRT primarily for the fact that it allows me to export levels to Excel for our team, and references quickly. Also, you can do quite a bit of behavioral statistic back testing on IRT, and both these platforms share the same data feed. So if you're not familiar with buying data and good market data, then I use IQ Feed from DTN, and it feeds both of these platforms, so I can share. I don't have to have multiple data feeds; I just have one. And then I've got Thinkorswim, which I use primarily for option stuff and setting alerts because it has really good mobile alerts. So those are the platforms that we're using. Anybody who's part of our community will give you all the templates for those platforms so you can kind of see what we're seeing. Good question. How long are your longer bias? So when the longer bias, that's a great question too, is really,
I think it depends, doesn't it?
It does depend. The short answer is what is the level that I would feel comfortable going home with? So if most of my trades are day trades, but if from a swing perspective, like where's a level that I would feel good going home with that level? And
so let's take, well, we just talked about this morning on the NASDAQ. So right now, NASDAQ path of least resistance is to the downside, right? Yep. That's our bias longer term. So I'm looking at a daily or weekly chart to determine that bias. Now, so when does that bias change? Well, there's times where, like we took out last week's high of around 7,100 on the NASDAQ. Okay, that's on an intraday basis, by the way. And at that point, I'm now cautious on my bias to the downside. Now, if we close it back above that for the week, then I think my bias could change. That's more of an aggressive bias. But right now, I don't think the bulls are fully in control of this market on the NASDAQ until we're over 7,400. Right, that's when my bias will absolutely change on the longer term basis. I'm cautious right now, to the downside, to the long side, because we broke that, we broke the 7,100. Now I'm waiting for this full confirmation above 7,400, and you may think to yourself, well, gee, that's a long way away. Well, sure, there's lots of little trades in between there, and the biases on a shorter time frame have changed at this point. Okay, now this morning we came in, and like Josh said, we were looking for an area to get short on a pop because our bias was short. And there we are, here we are right now, just made new lows on the NASDAQ. So it will really depend, and it depends on where price is and where people are stuck and where, where we are above volume, for example. That's going to be monstrous with those decisions. And there's just not one, and I hate to say this, but it's true, but there's just not one number that says, okay, above this number, our bias is this, above that number, it's this. Usually it's an area, and then we get cautious in that area. And then once we get above, like I said, 7,400 area, I've got about 20 points of range in there. We start trading above that, pretty healthy. That we got a reversal in the larger time frame. So.
Mm-hmm. I'll walk you through Yeah. I mean, I can't validate enough. I mean, it's, on a swing perspective, it's harder. It's a little bit harder to be as objective. So it's subjective based on, what's your capital size, where's the zones that you want to play with, and are you looking multiple days, where that is. I try to be a little more objective on my swing bias, and I'll tell you why my swing bias at 70-68, why that's the case, and it actually plays into what we're going to talk about next week when we talk about postures. So we look at, there's three inputs that well, how did I arrive at this? I try to teach my kids how to trade, basically. And I was like, okay, so how can they quickly find the plot in the auction? And one of the ways was to give them three variables that could kind of let them know where they were. And so if you look at current price right here, and then you look at the most traded price for the last 5 sessions, and you look at the most traded price for the last month. So basically, current price for the last week, price for the last month. You'll find between those three variables that there are about 9 orientations that occur over and over and over again. So, with that, the markets do consistent things. So when we trended higher after the midterms on Wednesday, so it was a trend day higher. Trend days, are strong directional days. At the time, the 5-day was down here, so that put price above the 5-day, which was equal to the 20-day. So that is a posture of the auction that typically continues higher. And we would, expect, some type of balancing day, and then, consolidate and then pushing higher. So that's why, unless that trend was negated, that's where my bias was. Since then, yesterday we took out IB low, which then now put this in question. And we also migrated that 5-day up to here, which that's now a risk ceiling, puts us actually between these two reference levels, which is why we're playing ping pong between them. And so now, we kind of favor whichever one we're closest to in the short time frame. But this is totally changing the expectation. It's canceling out any expectation that I have that this auction is going to just keep going higher. So but essentially the swing bias after today will actually migrate higher. In fact, I can just go ahead and move it because I can tell you where it's going to be. Is I'm going to be leaning short unless we trade above 71.84.
You're talking intraday basis, right?
It's intraday, but it's also multiple sessions. So, I mean, kind of the intraday is actually going to move. It'll be at least 70.96. Maybe lower, depending. If we keep trending lower, then it'll be 50%. Whatever the trend day was.
Yeah. So Tony, presuming your options trades are longer term bias, which is a longer bias. Okay, so options are a little different ball game. Okay, we're talking mostly straight up contract trades here on this deal. I'll just full disclosure, I'm long crude oil and options. Okay, but I have a real long time frame on that, so I don't want to confuse you with the bias. I mean, area. But right now we're just talking if you're trading outright contracts on the futures market. Now options, again, there's lots of different things you can do if you're scalping premium off this stuff or whatnot. So I don't want to say I don't want to answer that, but it's different. Okay. And Tom, you mentioned your post, right? Josh, you want to talk about the gap rules in there?
Yeah. So, like this, if you guys following us on Twitter, you know that we post, or Facebook, so we post decision levels every morning. And let me just, so you can see what that looks like. If you're not following these. So, it's basically just a snapshot of the chart on the open. And, like today here in crude, gap lower in crude, gap rules apply. And so the question was, you mentioned your post on Twitter that gap rules in play. And do you have specific rules that are published or general rules? So our team talks about the specific rules. I'll give you the general rules around a gap. So If the gap holds after the first hour, then that's confirmation of the gap, and you can use, well, let's say, for example, that we had not traded above the initial balance high, but we had, in fact, this had held. Okay, so that could be your risk level to be short for joining the shorts for extension lower, because then that gap is holding. The other thing that we do about gaps is, if, like in this case, where IB high extension occurs, so gaps lower, but there's buyers that step in, then that is a potential to potentially close this gap, and then it depends on how big is the gap. So the other thing that we talk about is how many, based on a percentage of the expected range of the product, how big is that gap? So if the gap is less than 25% of the expected range, there's a greater probability that that gap will close in that day. If you gap, I mean, like today in crude, where where we opened, we were more than 75% past the expected range of the product. We call that a tier 2 gap. Those very unlikely that they close. If you exceed the expected range of the product when you open, those almost never close. So we also think about gaps in terms of how big is the gap, and we call them a tier 1, tier 2, or tier 3 gap. And Tom, if you want, I've got those written down. When I send out the recording, you can get that. Just shoot me an email back, and I'll send you the written gap rules. They're pretty consistent. If it's a short gap, we look to fade the gap. If it's, let me put it in more concrete terms. Like, let's say that the expected range in crude is $1.20, and when the gap opens, say we've already traded 60 cents, that's what we call it, 60 cents or more, that's what we call a tier 2 gap. Then it's about a 50-50 chance that they'll close. And then if we open and we're at $1.20 or more, that's what we call a tier 3 gap. Almost no chance of that closing on that day. That would be extremely, extremely rare. So it just keeps you, what's helpful about gap rules is, and we see this all the time, traders will see movement and they'll think, oh, this is the time for me to go opposite that. And that is almost never the case. It's like the gap in reversal does not happen, especially if it's a tier 2 or tier 3 gap, almost ever. So if you built your trading perspective, or if you saw a gap and you're like, oh man, I'm going to counter this gap and I'm expected to close, then you're basically setting yourself up to just get run over. It's going to work one time for every 20 times it doesn't work.
Yeah, and here's the hard thing: when it gaps down like that, it's extremely difficult to go with it that direction to the away from the gap close, because we've moved so darn far.
Yep. And
you're like, okay, well, are they gonna get everybody stuck on a new low and then rip them, or so it's a difficult trade.
Yep.
Did you you saw the MK was looking for?
Yeah. Let's talk about the soybean trade.
Yeah.
Okay. So let me back this out. There's a couple things in play with soybeans. Everybody see how it seems like soybeans is just kind of in the same range of prices. Like if you're just looking at this chart and you said, okay, there's a range of prices soybeans have been in. What's that range? It's about $8.50 or $8.45, $8.50 to about $8.90 a bushel, right? So this is what we call a bracket. It's a longer term balance zone, but brackets have a way of kind of containing the trade until they don't. And this has just been a range that we've been holding in beans. Have not been able to close below it, have not been able to close above it. So yesterday when we had this WASDE report, so you can see we're kind of close to the top of this bracket. This is the top of the bracket, that's the bottom of the bracket. We have this WASDE report, and initially it comes up and tests this high volume node and then pushes lower. So what it looks like is that the bracket is going to hold this trade, and we're basically stuck in what I call ping pong land. But then at the close, the auction rejected and came back to where it opened to basically settle unchanged after a binary event where you're getting fundamental information about the market. You've got other time frame buyers and sellers participating in the auction, and they weren't able to get it lower. And I don't even know. I mean, JP, did you even see the crop report? I mean, I think I read part of it, and
No, I didn't dig into it this time, but
it
I
was
was going to do it this weekend.
a little. I mean, there's a greater expectation of reduced soybean yield or acreage, but it wasn't like, everybody's bailing on. So it wasn't like an uber bullish report. It wasn't uber bearish. So just you got to think behaviorally in the auction, how people behave around price when it doesn't do certain things. And so if you saw, let's take it away from financial markets. Let's talk about housing market. If you saw houses selling at pretty consistent prices for a while, and then someone sells a price much higher than where they're trading, and then all of a sudden, like they get like a couple houses up there, and then nobody else can sell houses at that price, then price is going to return back to wherever those comps were. So let's say the median house price in a neighborhood is 400K, and then all of a sudden we see somebody selling houses at like 500K, but they can't go higher. Well, then everybody's got in mind, they're like, oh, well, 400K was where everybody else was doing transactions, so we're going to go back to that. But what what also happens is people go, well, if I couldn't go higher, then there's not interest in going higher. So I can wait now for a deal, and I know that they can't get prices selling higher, so I'm gonna start pushing for lower prices because I know they can't go higher. So the inverse is happening here in the soybean trade, is that the auction tried to go lower and they got rejected. They couldn't close lower, so it created all of this buying excess. It's just shut the sellers off. So then today, that gives the buyers confidence to press the trade to the upside. And they're doing a good job. And if they can close above this high volume node here, then that'll open the path for higher prices and pushing out the upside of this bracket into next week. Because you'll have to, if you think about, well, in fact, let's just look at what the weekly chart will look like. Okay, if you look at the weekly profile, from where we started this week to where we're going to close, that's a pretty strong rejection of lower prices for the week, and would say, hey, we're going to be looking for the $9 a bushel, and and above that, then there's, I mean, if we get above $9 a bushel, this thing could be free to fly much higher. But we've just been kind of stuck in this area of trade for almost 2 months.
Yeah, and just remember, Josh said something important. Let's go back to the auction again, the process, and think about it. When looking at soybeans or just any market, doesn't matter. Three things can happen in a market, right? It can either go up, down, or sideways, right? Mm-hmm. And when you simplify it that way, you have to ask yourself, who's in control, right? That's our bias. Who's in control? Who's control at the moment? Who's in control longer term? All right. And when we don't see, for example, we were looking at a long crude trade yesterday, and we were in it, and it wasn't going for us. So guess what? If they can't get it going, and even when buyers are stepping in and they still can't get it going, so the other two options are going to happen, right? Either it's going to go sideways and just dribble out, or it's going to roll over and tank. And yesterday it rolled over. Mm-hmm. And so you look at the market and use the profile in those senses. Now you can establish risk. Mm-hmm. And people always say, what do you mean by establish risk? Well, what I'm trying to do is I'm not looking at, I can make this much. Okay, what I'm looking is how can I get into a market that has the potential, not the guarantee, but the potential of moving to a certain target. Okay, like we're talking about crude because we have such an amazing move in crude to the downside. So now crude is due for a pause and some rally, or what we would say profit taking at this point. Nobody's probably establishing a position down here, at least the other time frame traders are not. We don't see that kind of volume yet, but we're like, okay, this has the potential of rolling a little ways to the upside, right?
Mhm.
And so therefore we're going to look at, price, and we're going to look at volume, and we're going to look at how it trades at this point. And if we can't get over certain small levels like we saw yesterday, then we got to step out of the way and get out of the way on the deal. When we're able to establish the risk small enough to where we could get a nice little move like we did this morning, full disclosure, I missed that trade. I was focused on something else. That's how we establish risk, and that's what we mean by establishing risk. And that should be your first job as a trader. It always should be your first job. I know we always like to look at the P&L and we like to go, wow, I could get $1,000 move on this crude trade to the upside. Yeah, okay. That is true. There's no doubt about it. But my question is, how much are you risking to get that 1,000-point move, or that 1,000-tick move, or excuse me, $1,000 move? So that's in the establishing of risk. So think about it in terms of auction process. If you look at Josh's chart right now, and you look at the build outs on the order flow there, you'll see the red areas where we've had a lot of volume established, okay? Using the auction, say the auctioned down in the morning, it found buyers, it auctioned up, it's auctioned back down now again. It stopped, actually, if you point out to those first order flow profiles, Josh, at the bottom there around 59.75, that's where they came down and met again. Okay, so it's just the auction process, and this happens all the time. When we auction back up and we can't find more buyers to step in, it's going to go back to where business had been done. It was also a high volume node on the right hand side there at 59.75. Okay, so if I was, and where I'm going with this, so if I believe so much that this market's going to go up, okay, then that is maybe a place that I could establish some risk and say, okay, if I entered here at 59.75, I could either put my risk down below that most recent low, which would be around 59.21. But where's my targets? Okay, my target would be maybe that 67 or 60-65 area up above. We see a high volume node to the left up there, or even higher. Now, is my risk reward correct at that point? If it is, you've established good risk. If it's lopsided, I would probably not suggest that trade then.
Yeah.
That makes sense, Josh? You on board with that?
Oh, absolutely. Yeah. I mean, it just makes me think of the four questions that we encourage every trader to answer before they put a trade on. And the first, it actually, we talk about the risk, but the risk comes after we identify what's the opportunity that we would look for. So, because that way, when you're establishing the risk, you can say, just like what JP said, how attractive is that trade? When we were trading this morning and we were getting long at 59.84, we were looking for 60.55. Okay, so we're getting long here, and our initial risk was 65. So look at the reward to what we were willing to risk for that. It's like 3 to 1, a little bit more than 3 to 1. Okay, that's an appealing risk to reward ratio. And so we were willing to say, hey, yeah, we'll risk, 24 cents to go out, or 20 cents to go after this trade that's going to net us. It ultimately netted us 44 cents, but it got within 3 ticks of our target. So it was the right trade.
Absolutely. And not only that, we can adjust risk when we're in the trade and make it even less. Okay.
Right.
And what was the question I just saw? It was a great question. Can one identify longer term trades? Tony, let me see if I understand this. With what we're doing here, if I'm looking for a swing trade, this is the exact same way I would identify a swing trade.
Mm-hmm.
Okay. And matter of fact, I'd probably take the same amount of risk here, except I would put the risk at the very low,
yep,
rather than just below that little area there. So instead of risking maybe 15 ticks on crude, I may end up risking 40 ticks to get a swing trade that could maybe go 100 ticks or 200 ticks. Okay, so the swing, works the exact same way. We call them triggers. That's all we're looking for, is a trigger, so we can establish risk.
Yep. Yeah, I can tell you right now, I mean, if you want to be swing long crude, I mean, you have a couple targets that are really attractive. I mean, the first one I think is really attractive is here, which is a multi-session volume node, 61.68. The next target would be that 62.81 area. So you could say, all right, I could be long here. Here's my reward. Here's my risk. And why am I long? Well, because we gapped but then the auction extended IB high. So buyers are stepping in. Other time frame buyers are defending this auction to the downside. So I know there's other buyers there with me. And anytime you take a directional trade, you want to have other participants with you. That's why another reason why the bias is so helpful is it's like, where are other participants? I don't want to be the lone wolf, because unless you're swinging 1,000 lots, you're not going to be swinging the market. You could get swung. So, but this is especially if we're holding IB high, we got about 2 hours left in the session. We make another push higher. I like this area to be long with the low down here. I like that risk appetite for the potential to see that next week. Could even potentially see it today. I don't know, but could happen. And then you've got the other one here.
Yeah, if that would happen, it'd be into the close, and
yep.
That's not my trade, so that's not something I would take personally. I'm not going to take crude oil into the weekend, especially after the waterfall that we had. But yeah, Josh lays it out perfectly on the thing. Again, when order flow, or when you see that you're not right, this is the other thing. You either wait till your stop takes you out. Okay, in other words, you're out. And again, that's part of trading. If that's the hard part of trading that people don't like, is the loss. They don't like to lose, and they think it's against them. Listen, if you executed your trade and managed the risk, there's nothing wrong with that. My wife was a trader, right? And I know a lot of you probably don't want to tell your wife about your trades, but my wife always asked me about my trades. And the question she always asked was an established trade, okay? Because that's the language we used to use on the desk, is an established trade, which means that did you identify risk and it was part of your plan? And if I say yes, she like, okay, if you lost, you lost. It's no big deal. But if I say, no, I was trying to pick bottoms while crude was falling out of bed and I'm down, $5 on crude, she's going to take the pan and knock me upside the head and go, what are you doing? You got to get the heck out of the trade if it's just not, if the buyers or sellers or whatever your direction's not there. And that's why we use stops to get you out of the trade, because I'm gonna strongly urge you to ignore anybody who says you shouldn't use stops in trading, because those are individuals who will eventually be out of business soon. Mm-hmm. And I mean it, and I'm not trying to be mean or anything. And listen, it's just the way it is. You have to have control of your risk. And it's the number one thing that you can control in trading. Yeah, I can't control if the market goes up or down. We can have an educated guess based on volume, and we can use the price action and determine when other people are stepping in, okay? And we want to be on board with those individuals. But truth be told, we don't know. What if we're long crude, war breaks out, 5 drilling units go down in the Gulf of Mexico, well, I can guarantee you that price is going to move, and it may not be in our direction.
That's right.
And so you have to be prepared for that. That's the outlier. And the only way to protect the outlier is with a stop. Yep. So please, I want to see you guys become successful. And the only way you're going to be successful is you have a count.
Yep.
So.
Yep. Scott, so your question here, for swing trades, do you use trade the profile only, or do you also combine order flow? So we also combine order flow is the short answer to that. And I actually want to let's just look at crude on a daily here. And let me show you.
I'll be right back. I get something to drink.
Yep. So you can see, we've been doing above average volume for a while as we're pressing lower. The biggest, look at this, the biggest day was actually an upside day, was the largest selling order flow of this period. I think the fact that they couldn't go higher after that, was what tipped it. We were also at long-term levels. But as this thing was accelerating, 2 questions you always ask when an auction is moving in direction. Say, what direction is the auction trying to go? How good of a job is it doing at that? Okay. Now, what's interesting is, it was pressing lower on increasingly negative order flows. That's people just piling on to the order flow side. And then we had a couple days of actually positive order flow as the auction was just balancing and holding these levels before they started pressing lower again. Yesterday, you can see we had, again, higher order flow to the downside. What'll be interesting today is to see if on lower prices, if we could make, lower order flow. If we can't, then that's saying, okay, we had lower prices, but there weren't as attractive, people weren't as aggressively selling that. There's some divergence in that behavior. And, which would then say, okay, then we could come in Monday and pop. And, that's why also from the swing side, when you look at this thing on the composite, I mean, obviously it's tailing off, but look at, this is the monthly profile, and you can see the gray means it's the lowest 40% of volume at price. So if we can hold this 59.77 area, a pretty good chance we're going to go to 61.86 next week and test that. And if we can get above that, then the next area really to test would be the 62.89, 63.42 on the longer term. And if they really wanted to get going, I mean, they could go all the way back to 66.30. Because that's where value is for the last month. My guess is they're going to go to 63.40 and build out volume there, which would then shift this lower. So likely we're going to see this area, next week, week after that, and watch the auction kind of pause. We are holding.
So real quick, Josh, can you go back to that chart before we go on?
Yeah.
So again, let's talk about the bias. So shorter time frames, that bias is beautiful. Okay, longer time frames, that could be the area that Josh pointed out that maybe more shorts come into the marketplace to reestablish to see if they can take out the lows.
Yep.
So bias is important. There's no doubt about it. We talk about it every morning, but understand just there's different time frames in there.
Yep. Yeah, and then as part of our plan, we typically look at these levels and say, okay, well, then how are we behaving when we get to them? If we get to them, does it reject? An example of that, when
and that's order flow that comes in. That's when that's when order flow is important to us.
Yeah. This was a trade that we were talking about this morning. It was a short that I was building into. So fat cattle had been bouncing around 17, pushed lower early in the week, and then had kind of some responsive trade and looked like they were going to reverse, right? So this looks almost like the soybean trade. Here we test lower and then we come back to value, but they closed below this, and then this morning, look, then that gave them the confidence to push again lower. So these higher volume nodes, when you come into them, you just kind of watch how is the behavior when you get into them, because you're looking for it to slow the trade, but can they hold this? Can they close above it? What do they do? If fats come in and closed above, trading above 116 up to 117, then they could have been free to fly to 123. Instead it held them down. So that's, similar thing could happen here in crude is if we come up here and test 61.84, for example, we look for it to see if it can hold that level. And then, that'd be the first place to see if it can rotate down. Well, if it can't do that, then the next place is going to be 62.89. Well, if it can't do that, well, then, the next one is 63.42. And if it can't do that one, you just kind of do it in a cascading fashion. And
so I'm sorry, go ahead.
Yeah. And you're not committing to, you're just saying, here's an area of interest and I'm looking to behave, and I'll see what happens when we get there.
So you notice that there's no indicators, I suppose you could say profile is a quasi indicator. It's more volume. Sorry, my trash is getting picked up today. And it's a squeaky brakes. I need to get those working on. We're not paying enough taxes to the city, I guess. So we use volume and price, and I guess I'm going to ask, can somebody tell me why we use volume and price over everything else? Bueller? Anybody, just throw it out there. I don't care if it's right or wrong. There's no right. Well, there is a right answer, but I was going to say there's no right or wrong answer.
There's a right answer.
Wrong.
That's wrong. There's a right answer, and you could be wrong.
No, okay. So the reason we use price and volume is because everybody looks at price, right? And volume doesn't lie. It's not a lagging indicator.
Mhm.
The other thing that Josh says is that when we see buyers coming in or we see sellers coming in, which would tell you listen, and I don't know if this could be a problem for you or not, but a lot of people have this when they're new to trading, is that they try to catch tops and bottoms because they think they have to make money. Well, that could be farther from the truth. So when we see buyers and sellers come in, let's give the example this morning. I was not doing well. I had to take a phone call, and we were talking about this morning in the channel, and I take a phone call. And my focus went to that phone call. It was a personal phone call, and Josh and those guys were able to get long crude oil. Well, I was not long, so I wasn't going to chase it. Okay, and at this point, because it's a shorter term trade. However, I was waiting for an opportunity of maybe a pullback, and the trade still would have been valid as long as it stayed above a certain level. And I was looking for that pullback that I never got, so I never could get on board with that trade. Okay, so but what we're trying to say is that that wasn't the bottom that we traded. That was far from the bottom. What was it? How far was what's our low today in crude? So our low today in crude is 26.
922-ish.
22, is it? I got 20, yeah,
Like that.
26, 22. All right, so we ended up entering that trade at 59.85. Well, that's a long way from the bottom, isn't it? 26, thanks, Matt. Yeah. So 59.86, we entered, or 85, we entered that trade. We didn't get the bottom, but how many points did we squeeze, or you guys squeeze out of there?
We got 44.
Yeah, not bad. That's good trade. I don't think took a couple ticks of heat. Is that about it?
Yeah, we
Yeah.
took 2 ticks of heat.
Yeah, that's pretty rough.
Yeah. Yeah.
Good Friday trade, man. That's a real good. I was catching some crap about it too for not being on board.
Yeah. All right. Well, hey, we need to land the plane. I've got some stuff going on this afternoon, but wanted to thank everybody for joining us. And man, the questions keep those coming. We try to do this every Friday. Sometimes we move to different days, but once you've registered for one of these, you'll get updates on the rest. And trying to get the recording to you with any of the follow-on stuff tomorrow, so that you can review it. And if you have any other additional questions, be part of that. Just real quickly, we talked about these 4 questions that every trader needs to ask or needs to answer. They ask themselves, but they need to answer before they put on a trade. These are part of the objectives of our development pathway that we're working on every week. And next week we're going to be talking about those postures. So we talked about that, price and weekly value and monthly value. We'll talk about how to use that. So if you've not signed up for a trial and you struggle in your plan to know, okay, what's the narrative? What's the plot of an auction? I could show you just using these 3 variables next week how to pick any trading product that you want and immediately develop a trade plan around that, and have risk, have targets, have kind of a general strategy. So if you've not tried out with us, go to the site, pick your plan, and we won't charge you anything for a week, and you can get to be part of that with us for the next week. You'll see trades off of it. You'll see discussion around it. It'll be pretty awesome. Also, we've got a free course, You Already Know How to Trade, that takes what you already know about business and life and translate that into actionable trading. We are behaviorists as traders. Some people are fundamentalists and some are technical traders. We really use the profile to help us see behavior. It's really the graphical way that we can see what you used to be able to see in the pits, which was a behavioral trade. It wasn't a technical trade. It wasn't a fundamental trade. It was a behavioral trade. And that still is at play because humans drive markets.
Hang on, and one thing to add to that, I know somebody's thinking, well, what about algorithms? Well, that's true, but
Yep.
Who programs algorithms?
Yeah. So far, we don't have algorithms programming algorithms. But even if we had algorithms programming algorithms, the algorithms would be programming themselves based on original human behavior. So
yes, that's when I retire from trading.
That's right. If you're just new, this all sounds completely Greek, and you want to get a good foundation, we've got our Build a Profile video course. That's 12 modules, about 20 hours of content. It is for $100. Basically, it will kind of save you thousands of dollars in time. Pick that up. Anybody who signs up for our trade plan, which is what you can get a free 7-day trial of. Once those convert, if you want to build a profile, of course, we'll give it to you as kind of a backfill. But if you feel like, hey, I've got an understanding, I've been in markets for a while, I'm just not consistent yet. I don't have a trade plan daily. I'm struggling to really feel like I've got control around this. The best next step is to start with us next week. Sign up this weekend. Get oriented and spend a week with us. Again, it's not going to cost you anything, and I guarantee that you'll be a better trader by next weekend by spending a week with us. If you have any questions or anything else, you can follow us on Trade with Profile on Facebook or on Twitter. You can always give us a call or send us an email.
Guys, I'll just say this. Josh does a phenomenal job on the videos and education-wise. There's a reason he's actually narrating those, and it's not me. I can barely get words out of my mouth half the time. But Josh does a phenomenal job on there. He's a phenomenal educator when it comes to that. And I guarantee you're going to get more than what you think you're going to get on those things. And it's important. It really is. It's not a bunch of fluff on that deal. So if you guys have any questions, again, do not hesitate to reach out to us. We'll definitely answer your questions, and we'll get back with you. That's what we want to do.
Yeah. So we'll make it easy. Just look for all the links for any of that next step stuff tomorrow, along with the recording. And then want to follow up on any of the questions that you asked, you can always just reply back to us and try to be pretty responsive. But thanks for everybody sticking with us. We'll be back next week, and look forward to recording sometime either later today or tomorrow. Peace.
Have a great weekend, guys. Take care.